You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is a real estate expert and syndicator, Prashant Kumar. Now, Prashant is an enthusiastic, passionate, and goal-oriented multifamily operator. He applies his 25-plus years of experience in corporate America to analyzing opportunities and managing his real estate operations. He acquires and holds stable income-producing multifamily apartment complexes in emerging U.S. markets with long-term capital appreciation. In addition to his investment activities, Prashant also runs a real estate meetup in New York, as well as participates in numerous industry masterminds. Now, outside of his multifamily endeavors, Prashant is also active in the senior housing sector, which we're going to be chatting about here today. So, guys, with that, I'd like to welcome my guest here for today's show, Prashant Kumar. Prashant, how you doing today, my friend?
Very good, Kevin. Thanks for inviting me. So glad I'm here today.
Yeah, excited to have you here and excited to dive into your background and learn more about you and your, who you are and what it is you do. So, I think the best place to start with this, Prashant, is you spent 25 years in corporate America, which is it's a long time, right? Before really diving into the real estate side of your life. And so let's start there. I think that's really where the foundation was probably laid. And that's where, again, a lot of experience and skill sets were carried over into now your current real estate world. So give us a little bit of background on yourself. Tell us a little about who you were and where you came from.
See, I will start right from the scratch. I came from India in 97, 98 timeframe. And one of the top schools of the country, like one of the Harvards of India or whatever you want to call it. So, from a mental standpoint, my IQ was sort of okay, but I'm very focused. So I went into the corporate world and I was like heads down, working, managing teams, all across the world, globe and things like that. But somewhere that, when you stop working, you don't get paid. You take 2 days extra vacation, you don't get paid for that. Somewhere there was something in the heart that there's no residual value. Once you are retired, you are done, right? You may get some pension or whatever. So long story short, I had to have something on the side. I'm not a stock guy. I don't invest in stocks, never done it. But one of my family members said, Prashant, you should get into real estate. And he forced me. He said, buy this home. Like that, he said, buy this home and buy another. I took his advice. I bought 3 single family homes in a couple of months. And then I said, man, it's too much of work for me to buy one home at a time. So I said, let me buy multifamily. So within 6 months of that big journey, I bought another multifamily, 24 units, very quickly, and that took me only 18 days to close, while those single family homes were taking me like 2-3 months to close. This thing was so fast. I said, man, this is awesome. I can multifamily, I can close in one. It doesn't happen usually, but the bank gave me the loan. So that's my journey. That kind of, eventually, you are out of money, you start doing the syndication and stuff, right? So single family to multifamily to another bigger multifamily. And then I started going into all these, events, Rodcliffe, Jake and Gino, and you name it.
Mm-hmm.
And that's when, I said, listen, I need to do something where I can help others. I come from a very humble background. And that I always had in my mind, my money was sitting in the bank, not doing anything. And there are a lot of people out there, my friends. I'm just talking about my friends. I started with my friends only, my friends and the family members. Guys, you have $200,000-$300,000 sitting in your bank account. If you invest with us, you become the owner and you get 7, 8, 9, 10%, whatever on your return. And people started, when we produced results, people started giving me the money. And that's how this syndication started for me.
Okay, fantastic. So I want to back up to those first couple of deals, a couple single family houses, and then I think you said a 34 unit multifamily, correct?
24.
Okay. Were
Yeah.
you with those first properties, a single family and that multifamily? How were you going about managing them? That was before you really dove into syndication. Obviously, you were bringing in money from friends and family, things of that nature. But were you managing these properties yourself, or had you outsourced it to a property management team?
See, one single family which I bought, the first one in Fort Worth, Texas. I live in New York.
Oh wow.
I
Okay.
gave it to the property manager. Of course, I couldn't manage it. But two single families right after that, which I bought, they were short sales. So, but I was managing them myself, and it was too much work for me. It took too long to buy, and managing them was not worth my time. A couple of $100, it was not worth at all. So I found a wholesaler friend of mine whom I knew for a long time, and he wholesaled a 24 unit to me. Trust me, I saw the property on December 12th, and I closed the deal on December 29th.
Wow.
Bank was ready. I don't know why. I mean, of course, year end or whatever. They wanted to close a loan, and they gave me the loan like that, and that's it. Boom. That property is cash flowing ever since.
I've never seen a bank work that fast before. So that must have been special circumstances there. They needed to get one more loan on the books by the end of the year, right?
Yeah.
Some things they had some type of quota to meet there. And so, where was that multifamily property located? That first one.
So the first one I bought was in Mission, Texas, the southernmost point of United States.
Oh wow!
I can literally walk from my property to Mexico, in like 5 minutes.
Do you still own that property today?
I still own that property. It is still cash flowing. I'm not going to sell it. That's
Okay.
My first one.
Okay, fantastic. So at some point in time during that journey of you buying these properties, at some point either maybe you didn't run out of all your own money, but you wanted to start doing some bigger deals, and didn't really have the capacity to do that with your own means or even your immediate friends and family, and so you decided to kind of open up yourself to the world of larger syndication. So talk to me about that. That progress. What did that look like from that 34 unit they have in Mission, Texas, to what was the next deal? What was a step up from there?
Yeah, from 34 unit, I actually then I learned a little bit about multifamily, a little bit about marketing and all. So I started doing some marketing. So I hired a marketing company to do some cold calling for me. So my next step was to buy something more than 100 units, or at least more than 80 units where I could have my own staff. So I had, did some marketing. I found, a bunch of leads, like 8-9 leads, and I kept on following them. And over a year period of like 1 year, I ended up buying 72 units out of that marketing effort. But in that meantime, I got involved into the GP capacity. I learned up front that my money is not enough. I have to utilize everybody else's money, and for me everybody else was my friends and family members, right? Those who had bunch, and I just know it because everybody's in the IT world, and I just know how much they were making and how much they may be having. So guys, you are devaluing your money in the bank. Why don't you take the ownership with me in this project? And people came. People gave me the money, and I invested that money into GP position in some project. That was as a money raiser, so to say, to begin with. But then we bought another smaller project, 40 unit project in Atlanta. We fixed that up and flipped it in 18 months. So multiple things going on at the same time.
Got it.
Not just, yeah.
And were you still working your full-time corporate job at this point, or are you still working today? I guess is a question.
Yes, I am still working today.
Wow. So you're still managing a full-time corporate career with your real estate business. That's quite impressive. So
my full-time job has shrunk down to little sort of a part-time. I don't work full-time anymore, but it is more on a consulting basis now.
Got it.
It used to be like very hectic, 15 hours, 15 hours a day, but now it is versus 5 to 7 hours a day now. So I have 5 to 7 hours that I devote to my real estate business. Plus, I have other employees whom I manage, so they do a lot of work for me too.
Got it. Got it. You made a mention that you hired a marketing company. That's how you found that 72 unit deal. And when you say you hired a marketing company, they were doing outbound cold calling to apartment owners. Is that
That is correct. Yeah.
okay?
That's what I mean, hiring a company that time, because I had recently started into real estate, spending, shelling out that much money was a little bit of an effort for me to accept. But I said, listen, I have to do it. So I did that. And I ended up getting results, I ended up
Yeah,
buying a property out of that, So,
that's
and
fantastic. Is that the only one they ended up buying from cold calling efforts?
yes, I ended up buying that one from a cold calling effort. Yes.
Okay. And what was the profile of that seller? Was that just a mom and pop that had owned that property for many years?
Yeah. So that, so this is just my luck. I would say that he's an elderly gentleman, but he's a very well renowned builder in Chicagoland. And I talked to him. My property is in Indianapolis. I say, and I connect with elder people very much. I said, sir, if you don't mind, I will stop by tomorrow. It just happened that I was going to Chicago the next day, so I went and met him, and I kept that relationship alive with him for a long time. He was ready once to sell. He was not ready to sell, and I just remained consistent with him. And at one point, he said, Prashant, Mr. Kumar, if I'm going to sell it, I'm going to sell it to you. So I said, yeah, that's fine. We are still friends. And one nice day, after a year, he called me and said, I'm ready to sell. I said, send me the contract. And he sold me the deal.
Now, do you think that you got a good deal on that property, being that it was off market direct to owner? Do you think you got at a discount to what it would have sold for? Should it have gone in the hands of a broker out to the main marketplace?
100%.
Yeah.
I would say 100% by cold calling, by this off market thing. Yes, it was a long shot, and it was a long sales cycle.
Mm-hmm.
And it, almost a year, actually 1.5 years total, from day one till that day I closed. But I'm pretty sure that I bought that property at least 20% below market, at least 15% below market.
Yeah. That's great. So let me ask you this: being that was that was successful, whatever you spent on the marketing company, I don't know, I don't care if it was tens of thousands of dollars. It sounds like that was still worth the value that you obtained by buying this property at a discount. Is that not part of your business today? The outbound calling to property owners?
Right now, that is not part of my business, but I am of the strong opinion that if I have to spend dollars, I should spend dollar on the right type of marketing.
Mm-hmm.
And even if it is expensive, it is going to give me results.
Mm-hmm.
Some people do go back offshore and try to have, a slightly cheaper marketing done. But to me, that is not worth your time.
Mm-hmm.
If you spend some money and establish a relationship, and it's a long-term relationship with those marketing, because you have to understand those marketing companies are also looking for your business. So establish a relationship and have a continuing relationship with them. I'm 100% sure you'll get some results.
Was this a marketing company specific to real estate? Is this what they do for other clients? Is that kind of their specialty?
Yeah. So this marketing company, even though it was not a perfect fit for me, because they are more into single family calling,
mm-hmm.
but they are specific to real estate. So we had to work on a script. We had to kind of tell them, what are the cap rates, things like that, kind of educate them a little bit. And they made 1,500 calls, and I got like 9 leads out of it. And all of them, some of them died, or some of them were not okay, or whatever. Eventually, I ended up buying one property of that.
Yeah,
campaign.
That works. Yeah. Sounds like it was worth it to me.
Yes, it was 100%.
So aside from multifamily, I know that we had talked briefly before we dove in here to the show today that, one of the other, I guess, aspects of your business and a place that you're putting a lot of emphasis here in the coming months and years is the senior housing sector. So maybe speak to that a little bit, like what attracts you to that space? How involved are you today? And ultimately, what are your future growth plans in the senior housing space?
See, like multifamily, we see a lot of in multifamily, we see a lot of competition right now. Any deal, cap rates are compressing quite a bit. You have seen it, we are all in the market, we know what's going on. So about a year ago, I started feeling that maybe we should explore other asset classes also. I mean, obvious asset classes are like storage or mobile home parks, in comparison to multifamily. But in addition to that, I felt like assisted living is a space which can be explored further. Uh, it's not too much hoo-ha out there. It is there, but it's not like everybody is rushing towards it because more of an operation intensive business.
Mhm.
So that is something we started exploring about 1.5 years ago. We bought few single family businesses, resident level businesses, and we are, working on them, trying to improve everything there. But during this process, our goal is to start going towards the big box facilities, which are not residential level. So we have started exploring some of that as well. And it is not that we wanted to just go into the making money part. It is more, as I said, I come from a humble background. Our grandparents always lived with us. We took care of them. I connect very well with seniors. That was something, helping the world, in whatever capacity. Yes, there is a business at the end, but we want to help somebody. That's how we thought that we should start. That's the space where we are coming from. And when we go into that business, when we start looking at those numbers for the big box facilities, those cap rates are much higher. I mean, if you are looking at ground up construction and three-year three-year construction and fill up time period, you are looking at better cap rates. If you sell that property, you end up making probably much more than what you make in multifamily.
Hmm.
So that's the direction that we are going towards. The bunch of projects we are looking at, different places, nothing finalized, different states, So we have developed some contacts, contacts with the consulting companies or project or the operating companies, because it's a very operation intensive business.
Yes.
We come in as investors, we get it built, but eventually the operation has to be correct. So we have to find the right operations company which can run it. So we are just trying to explore a few projects right now, nothing concrete. Ohio, Arizona, different states, Connecticut, so bunch of places, Iowa, all over the map.
Yeah, senior living is. I'd say it's even more of a business play than it is a real estate play. It has a real estate component, but it's surely as much more of a business play than it is a real estate investment. And I'm actually fairly familiar with the space. I actually became a licensed administrator many years back. This is before the crash of '08. We were actually in the process of acquiring some raw land to develop some senior care facilities. In the anticipation of all these, baby boomers that were going to be basically hitting that ripe old age and needing, some type of alternate care. And so in any event, I'm very familiar with the space and still love everything about it. I actually have investments in the senior care space, but nothing as an active investor. And so, speaking to those first two projects that you guys are involved in, the small residential ones, were they already existing assisted living facilities when you purchased them, or were they just single family homes that you guys converted into an assisted care facility?
So yeah, we bought actually businesses, and those were distressed businesses.
Okay.
Even though they were there, but the occupancy was low and the quality of care was low. So we all bought businesses almost at very negligible price. So for us, it was more like buying a single family home.
Okay.
But with little extra money that we paid, but we took the SBA loan. So it was not a pure residential purchase; it was a business purchase.
Mm-hmm. What are the terms like on those SBA loans?
So SBA loans are pretty decent. Typical 5%, approximately 4.8 to 5.1%. 5-year or 10-year, 30-year amortization. So it was the loan wise. It was more of like residential loan, but it was SBA lender because no residential lender would give the loan on a commercially property. I mean, even though it's not a commercial property, but there's no lender who would give loan on a house where you have residential assisted living facility running.
Yeah. Got it.
So, so it is difficult. I mean, it is very, very difficult. I mean, find a loan. So you have to go to SBA for that.
Talk to me about the distressed aspect of these purchases. You know, what ultimately, where were the stress cracks at, and you know, how did you identify the opportunity and just really feel comfortable with the ability to fix what was wrong there?
Yeah. So basically, it is, there are a lot of residential homes, are being run by mom and pop, right? And they don't know what is, I mean, when we say button up your operations, they don't understand what does it mean. So people don't keep track of what is the cash flow, what is the income and whatnot. So we had an operator who had 3 homes next to each other. In the 4th home he was living, but he was, he had some family issues, husband, wife, whatever things. So they were not managing these assets correctly. I mean, there were deferred maintenance in the homes, rents too low, that broken things in the house, things like that, right? So not normal stuff, you fix and flip kind of stuff, but there were 50% occupancy there. So right there, you are throwing the money off on the table, right? I mean, you are paying so much. So your typical expense ratio were like 60 to 65 to 70%, right? And your expense is same except the cost of the food. You are not making any money. They were not making any money basically. So they wanted to get out of that.
Got it.
And finding those homes, you go through normal. I mean, there are specialized realtors or brokers who handle that market segment. So because it is in California has 6-bed limit. So these were 6 beds each. So we had 18 beds that we bought. So 9 of them were filled. And we asked for the P&L. They wouldn't have any P&L. There's no rent roll. Everything is like, mom and pop stuff, right? But SBA does look at all of them. SBA looks at what can we do. SBA looks at our background also, where we are coming from. And we were coming from multifamily background, running the businesses background. And we had the third partner that we had is an operator in that market anyway. So he is our partner so he identified these opportunities. We became partners. So we come from a business operation standpoint, and he's also a mom and pop kind of an operator. So we come in and helping him out to streamline his operations, improve the net operating income of the asset. I mean, it's all about how can we button it up? How can we show when we go? I mean, if we try to sell those homes today, maybe we will not get enough money. But once we button it up, show the P&L from last 1 year or 6 months, 95% occupied, then you can potentially sell it at 7-8 cap easily.
How far along are you in the turnaround process?
So we just hired a marketing company like today. Because of the COVID, our vacancy has gone down, and I'm pretty sure in the next 3-4 months. I mean, actually, we had to fix it, right? We had to move people around, and we had to fix all the property. Now they are kind of new, inside out. We have done a lot of renovation work. Now the goal is, I mean, as I said, we hired a marketing company like right now. An hour ago, we had the final call. Our goal is to fill it up. We are 50% occupied still. Goal is to fill it up in the next 3 to 4 months. And then once it is filled up, then it's up to us whether we want to continue to enjoy that cash flow, which is about, which is considerable. I mean, $10,000 per home we can easily make. So 3 homes, $30,000. We can continue to enjoy that, or we can, combine the whole package, 6 months, have 6 months P&L, historical, sell it and move on to the bigger facilities.
Yeah. Well, let's talk about that. Moving on from the smaller facilities to larger facilities. I know there's a fairly decent sized movement. I know there's multiple educators in the space that really preach to the, I guess some of the benefits of these smaller residential type facilities. It's more of a homely type environment. more privacy, not as cold. I mean, that you could go on, and they're really comparing it to like the big box type of element. And so, I'm sure there's truth on both sides of it, right? A lot of that's really just marketing. But in any event, I guess the question I have is, is it really a scalability thing as far as like, kind of like why you went from single family to multifamily, as far as growing your portfolio in the senior housing space? Because ultimately you probably could accomplish a very profitable business with purchasing and acquiring these, or even developing these smaller residential type facilities. Or do you see like other benefits outside of just the scalability of why you guys ultimately prefer to go to the larger type senior housing facilities?
You see, the biggest challenge with the residential, I know a lot of people talk, and as you said, it's a lot of marketing. The biggest challenge is to do the operations. And number one, operations. Number two, from a scalability standpoint, getting a loan on those properties, right? I mean, if I'm going to go and buy the business, there is not even a single lender out there. And I did spend like 3, 4, 5 months trying to get a loan on these businesses. Yes, you can get the loan on the real estate valuation, but not on the business valuation, right? And the commercial lenders do not look at those facilities as the commercial properties. So there's nobody out there who's going to give you the loan. And then you go to the SBA, and eventually SBA will also give you the loan on the real estate portion only, but not on the business portion, because they don't treat that business as an asset. They cannot put a value. They say if the business is 200,000, the most we can give you 10% on that.
Wow.
As a loan. So, I mean, if you're buying a $700,000 home, $300,000 business, you are talking about 25% of the 700,000 as the down payment and 80% of this 300,000. So next thing you know, you are putting in like 400,000-500,000, which is approximately 50% of the value of the whole transaction as a down
That's
payment.
shocking. That's shocking to me. Wow. I would have assumed that there's got to be some boutique lenders out there that will do these deals, but yeah, I've never researched it. So
if you find it, you let me know. I will be the first one to.
Well, I wonder how some of these. I mean, there's many different folks. A few I highly respect that teach these residential care facilities and converting a residential home into a senior housing facility. I mean, you're talking about significant amount of dollars to do those, not just acquire the home, but to do the necessary improvements to modify it, to fit the needs of a senior care facility. Yeah, and if you can never get that money back out by doing any type of cash out refinance, then man, like I struggle to see where those returns justify, that much capital outlay.
Yeah, from a conversion standpoint, you will buy as a residential home. You will put the money to modify it. Invariably you need to be modifying its residential home to fit it into, to make it to an assisted living facility, because you need separate baths, more bathrooms, more bed. You'll be converting the garage. You'll be putting some capital there. So there is 6 to 8 months, and then you will apply for the license. Once that conversion is done, then there's a licensing process. So you're talking about 9 months worth of delay before you can go into the operation, and then filling up time, anywhere from 2-3 months to 6 months, depending upon what you do. So you're talking about one single family you buy, it will take approximately anywhere from 8 to 12 months for you to start to operationalize it. So that will mean that if you have the scalability standpoint, that doesn't work in our world. I mean, we are talking about closing 500-unit apartment complex with our eyes closed.
Right.
3 months.
No, that all makes sense. And I think one of the exciting things that we briefly chatted about before we started recording here, about your forward emphasis on this sector of real estate, is the looking back at COVID over the past year, different industries. Some industries did quite well, some suffered significantly, and hospitality is one of those that just. And folks that are listening to the show, if you've listened to other shows, you've heard me talk about this probably many times. I've had even some hotel operators on the show, and just talking about just the how much hospitality's gotten its teeth kicked in. I mean, it has to be the number one industry that took the biggest hit, most significant hit during this this past year, and continues to. And in certain markets, I mean, there's maybe like certain markets like Florida that's been open up for a while, or like a beach destination, they might have their seasonal influx of people, but generally speaking, it's hurting, and it's hurting in a major way. And so you guys are actually looking at doing conversions, senior housing conversions out of those extended stay type of hotels. And so that seems very exciting and intriguing. I'm wondering, what are some of the key elements of what makes a good prospect when you look at a hotel, assuming that you can buy it at the right price, location, size. Give me an idea of what are some of the key elements that make a good prospect for a conversion.
So the biggest factor is the zoning, right? I mean, if a hotel is empty, doesn't mean that you can just go and convert it, right? It depends on the town, whether they are going to allow for assisted living facility in that area or not. That's the number one factor. Before we look at anything else, we look at the zoning, whether the zoning can be converted or not. That's number one. Number two, then you start looking at the population, and then you start doing the analysis, how much is then you do the research, basically the market research that you would do like in multifamily, what is the occupancy and things like that. You look at what is the general population, what is the age group, and what is their income, right? How much, and what is the demand, right? What is the demand for senior housing facility? So that kind of research is needed upfront. We go and call facilities around the area to make sure to understand what kind of response we are getting from the existing operators. So we do a lot of market research. We are doing a lot of market research, by the way. So price of the property is one thing, viability of the project from a zoning standpoint and the demand perspective is the other important part. And what are your distinguishing factor? Where do you stand out? What is your business plan? And then we basically look at, yes, now it makes sense. So let's move forward. Yes, there is always some, we try to, from a conversion standpoint, as you said, the important thing is how much capex do you have to put in there, right? Right. I mean, if you are going into a normal, Holiday Inn kind of a home where there's no kitchen or anything, and you need some sort of kitchenette or some sort of sink or the refrigerator or the microwave in the room, then you need to bring in the plumbing, which needs, your cost starts going up, basically. So muultiple factors, zoning, demand, what does the area support, how much demand is being met by the existing rooms that are there in the industry in that area. Based on that, we decide, so those things.
And I'm assuming, even when we say location, not just meaning the market, I'm sure things such as I'm like some of the, I've seen residence inns that are almost like abutting like a residential neighborhood. They're not necessarily right off like the interstate, like they're not right there at the interchange. They're down the road and they're kind of like tucked back in more of a residential setting, which again, to me, thinking of placing like a mother or father or, a family member into a home like this, it seems, just the more comforting to have it be near homes and near, tractor trailers driving down the highway, right? Or gas stations or truck stops or what have you.
You cannot have a assisted living next to a truck stop.
You might be. Hey, man, that's a business model, man. We don't know yet. No, that's. And I'm assuming. I don't know when ADA compliance came into play. As far as like hotels being built, but most of the later model or later built hotels are all ADA compliant already. For the most part, doorways and things like that, the elevators, and so probably not so many modifications in the common areas as what you'd have to do in the actual individual rooms themselves to create a accommodating atmosphere for a senior housing type facility. So in any event, well, that's exciting. I mean, again, it's interesting. Even starting probably about 6 or 7 months ago, I get updates from 10X which is, their, I guess it's part of auction.com. And
Yeah.
I'd say the majority of upcoming auctions that are coming to the marketplace have been hotels. I mean, literally 90% of them, at least. Maybe they're marketing me because I've been looking at them. And so now I'm seeing as hotels, but it seems like there's a lot of hotels that are going up for auction. And I'm assuming that number is going to continue here for the coming years, especially with some of the major CMBS defaults that are playing out as we speak right now. So we'll see what time brings, but I think you guys will have a lot of opportunities to probably pick from here in the coming years in the hospitality space. A couple of things before we wrap it up, Prashant. One of the big things that I try to take a contrarian approach to is not just always talking about the good about real estate, all the money that we can make, and all the deals that went so well, and what have you. I like to take the opposite side of the approach there, and really hone in on challenges that we faced along the way, the deals that didn't go as planned, the deals where we potentially lost money or had a bad partnership. And so, with that being said, is there a deal? One deal that comes to mind that was just a major challenge. You lost money, bad partnership. Anything that comes to mind that you'd like to share with us.
100%. Everybody. As you said, everybody who says that they don't have bad experience, they never had bad experience. Either they are not doing anything or they're lying. So from that perspective, yes, we had a deal, bigger than what probably we could have done ourselves. But nevertheless, we were doing it. It was a 575 unit, something like that, in Houston market. Very difficult deal, opportunistic deal, like 60% down or 40% down, something like that.
Wow.
Due to rain, a couple of years of damage and stuff like that. We were very excited. We didn't know whether it would go. It was in contract, and we had extensions and all that. So, 3 months contract and 2 months extension. Very difficult deal. And I must say that we were not experienced enough. But our partners were experienced. Anything and everything you can think of could go wrong, went wrong on that deal. We had bridge lenders, we had multiple bridge lenders, and all of them retraded us on the deal. Our capex kept on going up higher and higher. It was I don't even remember the numbers, but it was like a $17 million deal. Our capex was like $5 million. That kept on going higher and higher. Our raise became like $10 million. You name it. All the lenders retraded us. All the insurance companies retraded us. All the property managers retraded us. You just name it. Everything happened. I can write a book on that. But eventually, we were at the closing table. We reached to the closing table. We had an equity. We had to bring an equity partner. We reached to the closing table. Let's say closing was tomorrow morning, and tonight at 10 o'clock, our equity partner said he doesn't want to do the deal with us.
Wow.
6 months worth of effort. Everything was on a golden plate. The good thing about that gentleman was he said he would do the deal himself, and maybe he was planning it that way. So the lesson that we learned that, when you go to the equity partner, make sure that they're not take over the project from you. But we did, we went with them, and but he said he would do the deal himself and he would pay us our money back. For me, my personal money, 500,000 were hard that night. Tomorrow morning, it would have vanished. We would have been out of contract by that next day morning. So he said he will give us that money, and he gave us extra 1% to put the deal together, as our commission. We were not looking for that. Obviously, it was a money-making deal. The point is, what we learned from that is, do not. Before you start running, start to learn to walk, right? So we thought that we could do that 500 unit deal, even though it was so difficult deal. And we kept on trusting those who met us. And we signed up with the guy, and everything went okay. But at the final minute, I mean, there was nothing we could have done at 12 o'clock midnight, right? For next day, 8 o'clock closing. And he said, I'm going to do it myself. And he took over the deal from us.
Wow. Any idea, was there reasons given as to why that decision was made at the last minute?
Nobody would give you the right reason. Maybe he was planning. Maybe he was planning it that way. He took over our KP also, and he just did the deal.
But how did he benefit from dragging you guys down that road? Because you guys did some work. I mean, you basically helped put it together, and then ultimately, because he gave your money back, but you guys spent a lot of time and energy and put resources.
Yeah, it was on our contract, right? So he came in the last 1 month.
Oh, I understand. Okay, gotcha.
He came in the last 1 month. And
that's snaky. Yeah. That is snaky.
I don't want to name.
Yeah, no, that's all right. Well, I can make my own opinion out of it, but either way,
what I say is he was.
But you live and you learn. You live and you learn, and I think that really goes to, and I don't know what you would have done differently. Maybe you've reevaluated the situation multiple times or replayed it, but. We always like to think that, next time around, like that will never happen to me again. And you can do your best to, cross all the T's, dot all the I's, vet the partners that you're teaming up with. And you should be doing all of that, but inevitably things still can take a turn for the worse and not work out as planned. And I think that's just really, that's to be, not necessarily the situation, but like, that's just to be expected. If you're going to be, not even just in real estate, if you're just going to be in business, if you're going to be a business owner and you're going to be involved in very different types of transactions all the time, I mean, there's going to be scenarios that come about that aren't expected, and they're going to smack you in the head sometimes. And other times, deals are going to exceed expectations, right? And hopefully it all balances out in the middle. But
and trust me, I have met very, very fine gentlemen all across my career in real estate. I've met fine people, and I have benefited from them, and they have benefited from me.
Yeah.
So it's just a bad experience that we, like any good experience, bad experience are likely to occur also.
Yeah. No, absolutely. Well, I appreciate you sharing that with me, Prashant. And, just the transparency means a lot. I mean, that is absolute integrity. So really appreciate you sharing that scenario and situation that you experienced. Where can listeners find you, Prashant? What's the best place to reach you and learn more about you and what you got going on?
See, the most important thing is, nowadays everybody's on social media. My email address is prashant@myrealitygains.com, right behind me. My Facebook is myrealitygains.com, whatever. LinkedIn. If you go to my website, myrealitygains.com, there is a 7-day email course which I have created for passive investors. I've created a passionate passive investors club. We don't sell anything. It's just helping. We give a lot of information out. We write blogs, newsletters like everybody else. So feel free to connect with me there.
Okay, fantastic. Prashant, it's been an absolute pleasure having you on the show. Thank you for joining today.
Kevin, thank you so much. I'm honored that you invited me on this call today.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. You take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.